Why are 90%, 95% of trades unprofitable? Why? Why is it like that? Are we just food for the big players and merely the link that always fulfills the role of being devoured? Or why is it that 95% to 98%, although for each person and in Ukraine the statistics are slightly different for everyone, but why is it like that? I will try to explain it from my point of view, why it might be like that. I think that when someone sees something on the internet, the first thing is money. That's clear. We are attracted by money to earn money relatively easily, because when the graph is already completed, it looks like I know exactly where to buy and exactly where to sell and where to close the position. And when I come across a video that shows the style or strategy as really simple, just repeat this and you'll be a millionaire at least. Then if it's that easy, why not do it, right? You start doing this, and surprisingly, at this stage, you are successful. It works, it really works, the price action works. What I saw in the video and now tried myself, it works. You usually try it on a demo account, where there aren't many emotions involved. There are some emotions, there are joyful wins, but essentially it doesn't matter to you at all. Then you try it with a small capital, where it's nice to win. It's a beautiful endorphin rush you get from the win, that you were right, that you found it and traded it, and it's great. Then you progress further and further, and you start dealing with larger accounts or prop trading. You say, sure, I'm ready after the week or month I've been trying it, and I don't really see a problem. So you're ready for the prop trading, or to take capital from your parents, any amount, because here I've demonstrably earned at least 5 to 10%. So basically, I've understood the strategy and I'm going for it. And now comes the turning point when things stop going well for you. Because you realize that it's fine, but sometimes you get a stop loss, and I made a mistake here, and you try to get interested and try to educate yourself in some way. And it's kind of counterproductive. It's like the chicken and the egg situation. It's a kind of vicious circle. Without that education, you will never be profitable in the long term. You simply can't close yourself off in that bubble at the beginning. It just doesn't work there. Or it might, but I don't know anyone like that. So you start studying. When you study, you come across other strategies, and like thousands of other people, you become what's called a seeker of the Holy Grail. That means, hey, there's this strategy and it's better, and this one is better, and this one works, and I see it here, and so on. This is a certain phase and development of the trader as such. And you keep studying and studying things. And already at this stage, because you're jumping from strategy to strategy, and you're applying something from a bit here and a bit there, you're actually breaking the system, the basic, the easy principle for which you actually came to Forex. The reason you started trading, you completely break it. As an inexperienced person, you're building some new laws, new rules, and so on. That's not possible, right? So logically, you're deceiving yourself in that, okay? So you understand that it doesn't work that quickly, and you start looking for some kind of professional education or education that isn't just about one video on the internet, but is systematic and guides you somewhere. And there are quite a lot of mentors. So you find a group, you find a business model that you want to pursue, and you try to trade it. And now you're gaining that knowledge, those experiences, and you start combining them, etc. And it's incredibly difficult because you already know a lot of things and you have a bit of a mess in your head from those old things. Now everyone tells you what you've forgotten until now. Now, listen to this from here, but it's nice to say, but in practice, forgetting something you know and have learned is quite difficult. So you're gaining that knowledge, but you're not able to simply erase the old ones. So it all overlaps. And you really have a mess in your head. You can't do much with a mess. A mess is good, great on the table, but not in your head. That means you have to make some order out of it. You really have to start from scratch, as I say. Go back to the basics, simply back to the beginning. And from that beginning, you have to clear the table completely and just start writing. Start with what you want to look for, when you want to enter. Have a clear plan. Without a clear plan, it will be difficult to find success. And you have to have it in your head as well, and that is I think it's more important to clear your mind, to sort it out in your head and know that there are periods. And these periods simply cycle in Forex and in other markets. But I mainly trade on Forex, so that's why I'm talking about Forex. It doesn't matter whether it's stocks or anything else, commodities. And they cycle. There are periods when things simply go less well, then better, then less well, and so on. It's a problem when you're in that mess, when you still have that stew on the table in your head. So you sometimes live around zero, around a better zero, but it's not enough to pay the bills because you're in the study phase. And then there comes a month or two when trading just doesn't go well. So for most traders, it breaks you. It just breaks that last bit of confidence that trading could make some money, and it ends it. And those are the ones, that's what it's made of. And unfortunately, that's the majority. That makes up the majority. That means I'm kind of living above water, slightly below water, slightly above water, but nothing dramatic in either direction. That's the majority. That's most of the time. And then there comes a month or two when it just totally knocks you down. So that's it. And you leave Forex for a year, 2, 5, or forever. And then you're actually part of that statistic, the 95% who don't succeed, I know it's not easy to get through that time. When whether you make the right trade or the wrong one, you just keep getting stop losses. And keep getting those stop losses. It's not easy to handle it mentally, but for that you need to have the experience. That means you won't be good in a week and you never will be. That's why you need to be in the market for several years to understand that these are individual periods when things go, and there's no strategy that I know of. Maybe there is such a thing, but I've been in the markets for a limited time. I haven't seen everything, but from what I've learned so far, I know that in every strategy there are better months and worse months. And we are not able to define those worse months, whether it's a week, a month, a period, whether it's a 2-month quarter it can have. However, we are able to define that when we add up the year or even the quarter, we are definitely in profit for the year. This is unconditional. I have not yet experienced a period in the markets where the year was a bad period. But even in that quarter, that's why I don't evaluate myself weekly. That's why I don't evaluate myself monthly. Because there are months, maybe even 2, when the markets are just not performing well. And I just notice it and slow down. I don't rush into every trade, and you can tell in the market that it's not worth it. Or for me, it is recognizable. Simply put, if I'm a trend trader, which I am, and the market is just moving sideways, then I have no business being there. So my task is simply to wait. And whether it's for political reasons or for any other reasons, it could simply be a disrupted world, but for any reason. Investors are hesitant to invest heavily and are more likely to wait. So I'm not going to be the one who says, but I know best, I will trade. I will simply wait as well. I just have to wait for my trend, on which the strategy is based. So I wait. I don't panic because I've experienced it before. It's nothing new to me. But for those people who are in that development and it's their first time, like with crypto, there was always that bull run, everyone was making money, and then there was some correction. When the bear market was set in crypto, well, then everyone dropped out. And now I was explaining to someone, imagine someone was able to lose money. They bought, and without any work, they bought Bitcoin and were able to lose money. How is that possible? Well, they sold in some panic, in some emotional state. They sold the Bitcoin, and because of that, they lost money. Because the price, they were afraid for the asset, so they just sold it at a loss, so they lost money. If they hadn't done that, just look at where Bitcoin is today, assuming they didn't buy it at 100,000, then actually, and if they bought it along the way, it was impossible to lose money on Bitcoin without some leverage, without trading. If I were to take it purely as an investment, but a lot of people bought it purely as an investment, like I'll buy a piece of Bitcoin just to have it, and suddenly the Bitcoin just went the other way and they didn't know to buy more, but on the contrary, oh my God, it's going to end at 0. I better sell it, based on some emotions. And those emotions are present in investing, but I think they are 1,000 times more intense in trading, because they are more frequent, more intense, and constant. And sometimes those emotions can be beneficial, though they're never really great and we shouldn't succumb to them. But sometimes the emotions are positive, sometimes they're negative. And we have the urge to succumb to the positive ones as well. It's a great feeling when you just hit your take profit. And now you've hit your take profit, things are going well, it's moving forward, and you're on a roll. And it's an incredibly amazing feeling. Anyone who trades knows what I'm talking about. For those who don't trade or are just starting to try trading or investing and are thinking about trading, it's an amazing thing. And simply the chemistry in the brain works in a very general way, to the point where we can become a little dependent on it, needing that rush, needing this. It also leads you to an unpleasant situation where you feel the need to be in the markets constantly, and you start using lower and lower time frames to always be in a trade, which isn't entirely beneficial for achieving the long-term goal. So just why people, and now we've talked about investing, we've talked about crypto, we've talked about Forex, and it doesn't matter whether it's commodities or Forex, it's always the same story. That means you have to get beyond these experiences and know that there are simply good months, but not just know it, experience it. Unfortunately, it's an incommunicable experience. So go through these things, go through the failures, and when something like this comes again, I know that it lasts for a while, that it's not just a week, it can be longer. I know exactly what to do, that I should choose the top trades, have fewer of them. Having fewer of them means I also have fewer failures. So yes, I'm in a defensive stance, and that's how I approach it. And suddenly it takes off. The market starts doing those nice things that we want to see. What we want to trade, that's our time to wait for it. And the waiting is hard. I understand that, but if you want to be a trader, then waiting is simply part of it. So maybe I've explained to you that along the way, before you reach those 5 years, many people simply drop out. They can't endure it. And they can't endure it for financial reasons, time reasons, psychological reasons. There are countless reasons. Like, what reason do I have to quit this training? I won't lie to you. It's not like it never crossed my mind to quit. We all have those emotions. We're human. We're just human. Some people have a bigger temperament, some smaller. Mine isn't particularly extreme, but it did cross my mind to just quit. But I'm glad I didn't actually quit. Take care. In the next video, and of course, subscribe, hit the bell. Those are all the things that help move the channel forward, and I would also be happy about that.